Welcome back to Instables, everyone. Again, going over our intraday and swing trade perspective. Again, getting a momentum candle to the upside after non-farm payrolls coming out a little bit better based on increases in wages. And again, we did have this spike. Our question is from here, will we continue on with this bullish momentum? What exactly are we looking for here? Again, leading into Powell on Tuesday and leading into our most important day of this month, CPI coming in on Thursday, looking to see if we will get that continuation with that decrease in inflation or if we will possibly consolidate within inflation. I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy. Subscribe if you're new to the channel. Let's jump into this one. So jumping into the daily chart with you guys here on the SPY, I wanted to recap on the weekly chart because, again, ending the week, where exactly did our candle close and what kind of momentum are we expecting from here? As you guys can see, again, we do have a spike coming out of our indecisive doji candles that we were looking to see if we would possibly get momentum to the upside or the downside from, possibly respect our 20 to the downside, or possibly get that momentum as we do have wicks to the downside. So again, looking for confirmation from here is what we're looking for. We did not get confirmation to the downside. Jumping back over our 20, looking to see if our 20 will possibly start to curl up here leading into this week. Will be the watch, looking at our 20-day moving average, looking to see if we will possibly get our 20-day again to curl back up so we can possibly cross over our 50. And then from there, we will be looking to see if we can respect our 20 to see if we can have a bounce back. That would be that bullish case scenario if we're looking to see exactly what would happen here. We still do have our 20 below our 50. So again, making sure that we are still very cautious, especially after our large rejection here on our 50-day moving average. This could just be a quick bounce for that possible rejection on our 50-day and possible confirmation to the downside from here as we have our 20 still below our 50. So again, keeping that in mind, we could still have confirmation to the downside, being very cautious, playing to the upside as far as longer swings go. Now on the daily chart, as you guys can see, again, on a spike, we do have, again, a gap down that we had prior. So again, we need to make sure we are careful playing to the downside. If we do continue on to fill with this gap, then we could possibly retest our 50 here and look to see if we will continue on to get that bullish momentum above our 20-day moving average as we curl back higher here, or will we possibly break down, again, dropping below our 20 and giving us more confirmation to the downside. Again, we are going to be testing our 50-day moving average as our 20 is below our 50. So again, we are still cautious, like I said, playing to the upside, being very cautious, but again, also to the downside going into this week. Again, on the daily chart, we do have, again, a push above our 20 as we do have a prior gap down that could be a continuation on a gap up here and retesting our prior highs that we had before our confirmation on that gap down. So again, keeping that in mind, we are leading into this week. We have bullish momentum. We are cautious playing to the downside at this point in time. A lot of people were curious, when exactly should I have been playing to the downside at this point? Again, we have been looking for confirmation, looking for that possible engulfing candles to the downside. We did not get that confirmation. So again, making sure that we were cautious. Now looking to see if we will possibly gap into our prior gap down. But again, in my opinion, like I said, looking for more confirmation, looking to see if we will reject our 50 or if we will start to respect our 20 to the upside from here. And then again, overall, looking at the upper end of our channel to see if we can continue. Again, we have been getting multiple rejections on the upper end of our channel. We have been looking to see if we can avoid these rejections that we had prior on the upper end of our channel. So again, if we do continue looking for that proof of concept on the upper end of our channel will be very key. And again, with Powell coming in on Tuesday, CPI on Thursday, going to be extremely key. Exactly what data we get coming out on CPI. If we get a possible increase in inflation, then we could have that possible major sell-off and continuation on lower and loss of anticipation of that possible Fed pivot or Fed cut that we would be pricing in at this point in time after Nick Timmerose mentioning that possible Fed pivot. So again, keeping that in mind. And the reason why I also mentioned that we have that possible gap filler on that gap down there is because we do have our 12 just looking to see if we will cross over our 26, almost just crossing here. So again, we have a lot of reason to think that we would possibly continue on with that bullish momentum short term. But again, making sure that we're cautious as we are leading into our 50-day moving average here. And we could continue on with that rejection with our 20-day crossing below our 50. Our EME lines still below the median of MACD. If we had our EME lines above the median of MACD, let's say our 12 and our 26 were coming lower here, and we were looking to see if they can cross higher. Again, very close to what we have now above the median of MACD. That would be different. That would be a possible continuation. But again, keeping in mind, we do have our EME lines below the median of MACD. So again, we are going to stay cautious. And as far as the largest indicator that we have been tracking, again, looking at the DXY, the dollar has been showing strength. And as you guys can see here, after our engulfing candle here, testing our 50-day moving average, getting a rejection here. So again, being cautious is exactly what we made sure that we did do. We are looking to see if we will continue to respect our 20 or if we will get this pullback here, get this strong rejection that we had today on the dollar, and continue on with that rejection. We'll see exactly what happens going into next week. This is not an engulfing candle to the downside. We are not completely covering our prior day's body. So again, no engulfing candle to the downside on the dollar to show us that we are getting confirmation weakness here on the dollar. So again, keep that in mind. And here, looking at our EMA lines on the MACD, as you guys can see, we are pointing up. We are still above with our 12 and our 26 until our 12 crosses back below our 26, then we are not looking for that continuation on bullish momentum in the market. In my opinion, we still have strength here on the dollar. We could continue on with an increase in buy pressure just like we just did. We could continue on with a large increase in buy pressure, and that could be that major sell-off in the market, making sure that we're careful. We're still sitting within buy pressure points, looking to see if we will continue on with decreases in buy pressure with white shaded lines coming in, and then get that possible decrease in momentum to the downside here on the dollar so we can get strength in the market. So again, that's what we're looking for here on the dollar. Very key that we keep an eye on that. And then to conclude here, I wanted to go over exactly what our price target would be if we possibly did continue on higher here. As you guys can see here on our VPVR, if we're continuing on here with this gap up, again, looking at our VPVR, we have our strongest point that we would be looking to see if we can test and possibly continue on higher from. Again, this is our 393 level. So again, in my opinion, if we continued on higher into a gap up, keeping an eye on that 393 possible rejection and bearish candle setup from there if we're going to continue on lower will be very key. Again, we're still leading into the upper end of our channel. There's not a lot of room to run to the upside, in my opinion, and still looking for that possible proof of concept at this point in time. In my opinion, extremely cautious as far as playing longer swings here at this point, looking for better momentum as far as longer swings go. But intraday, again, looking to see if we will gap up into that gap down that we had. Again, looking at our 4-hour possible intraday move here, as you guys can see, our 20-day did cross over our 50. We're looking to see if we will respect it. Looks like we are, and looks like we are very likely to possibly gap into our prior gap down as we are pushing into it. So again, that is our next move leading into Monday, in my opinion, more bullish than bearish. But again, looking at our overall picture here, looking at that possible bearish continuation. Now, again, with that said, if you are a day trader, if you're looking for very volatile breakouts, we mention them every single day in the Instabills room. Any breakout that is worth looking at throughout the day, go to instabills.com in the description below, and you will never miss a breakout alert today again. And again, all of you Instabills that come over and support the channel every day, we will continue to go at it, take what the market gives us as we are leading into Powell on Tuesday and then CPI on Thursday. We will see exactly what numbers we get. If we get that continuation with decreases in inflation, we get that possible relief rally here that we had on this pullback that Powell let us down with our increase in unemployment that we didn't exactly get high enough on. So again, keeping that in mind leading into this week, we'll see exactly what happens. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.